Welcome. Accounting Terminology for CA Foundation, Part 3, Deferral. What is deferral? It is postponement of recognition of a revenue or expense after its related receipt or payment into bracket or incurrence of a liability to a subsequent period to which it applies. Common examples of deferment include prepaid rent and taxes, unearned subscriptions received in advance by newspaper and magazines, selling companies, etc. Deficiency. It is the excess of liabilities over assets of enterprise at a given date. The debit balance in profit and loss statement. Uh, Deficit. The debit balance in the profit and loss statement. Depletion. A measure of exhaustion of a vesting asset represented by periodic right of a cost or other substituted value. Depreciation. It is a measure of wearing out consumption or other loss of depreciable asset arising from use, execution of time, or obsolescence through technology and market changes. Depreciation is allocated so as to charge a fair proportion of a depreciable amount in each accounting period during the expected useful life of asset. Depreciation includes amortization of asset whose useful life is predetermined. Depreciable amount. Depreciable amount of a depreciable asset is its historical cost or other amount substituted for historical cost in the financial statement less the estimated residual value. Depreciable asset. Depreciable asset are assets which are expected to be used during more than one accounting period and have limited useful life, are held by enterprise for use in the production or supply of goods and services, for rental to others or administrative purposes, and not for the purpose of sale in the ordinary course of business. Depreciation method. It is any method of calculating depreciation in accounting period. Depreciation rule. A percentage applied to the historical cost or substituted amount of a depreciable asset, or in case of diminishing balance method, the historical cost or substituted amount less accumulated depreciation. Diminishing balance method, a method under which the periodic charge for a depreciation of an asset is computed by applying a fixed percentage to its historical cost or substituted amount less accumulated depreciation into bracket net book value. This is also referred to as write down value method. Discount. A reduction from a list price, quoted price or invoice price. It also refers to the price of obtaining payment uh, on a bill before its maturity. Dividend. What is dividend? It is a distribution to shareholders out of profits or reserves available for this purpose. Entity concept. Entity concept means the view of relationship between accounting entity and its owners, which regard entity as a separate person